Are you tired of guessing which stocks will grow and which will crash? What if I told you there's a simple, step-by-step formula to analyze any stock without being a financial expert? In the next 3 minutes, I'll show you how smart investors break down stocks before investing and how you can too. Let's get into it. Step 1. Understand the business. Before looking at charts or numbers, ask yourself, do I understand how this company makes money? What are its products? Who are its competitors? If the business doesn't make sense to you, it's a red flag. Invest in what you understand. Warren Buffett, 101. Step 2. Check the financial health. Look at these key metrics. Revenue growth. Is it increasing year over year? Net profit margin? Is the company actually profitable? Debt to equity ratio? Too much debt equals risk. Use free tools like Yahoo Finance or ticker.com for this. Step 3. Analyze valuation. Is the stock undervalued or overvalued? Check the PE ratio, price to earnings. Compare it with the industry average. If a stock is too expensive, even a good company can be a bad buy. Step 4. Evaluate management. Strong leadership equals strong company. Google the CEO. Look at past decisions. Check how much stock the insiders own. That shows confidence.